This is the Real Estate Center audio experience.
Hey, welcome to this week's episode of the Real Estate Center audio experience. I'm your host, Jas Takhar. Quick recap from last week's episode when we spoke with our expert, Ali Cadell, on mortgages. We got into the process of getting a mortgage, talked a little bit about how rates are determined. We also went into the new B20 rules and how they affect you as a buyer, the role of a mortgage broker. So do us a favor, if you haven't heard it yet, go back to last week's episode, subscribe to us and the Real Estate Center audio experience on iTunes, follow us on SoundCloud. There's tons of ways to get to us. So and all your comments, as usual, are they mean the world to us. Today's discussion, we're going to be speaking with Jeffrey Lemos from HST Relief Rebates and Loans. So they started this service approximately 5 years ago. They help purchasers reclaim their HST rebate in excess amount of approximately $8 million. So what that means is they've helped investors and buyers get back approximately a little over $8 million in the last 5 years in rebates. Their service helps with making sure that on closing, investors are not, taken by surprise, because we've all seen and heard horror stories at closing, and we're going to get into that. And so Jeffrey and Jeff Lemos, thank you very much for joining us today.
My pleasure, Jas.
Awesome. So listen, for our out-of-town listeners, because we have, our listenership is pretty national, let's start, what is HST?
HST stands for Harmonized Sales Tax. This was introduced to Ontario in July of 2010 by Dalton McGuinty. He thought it was a good idea. Just like this rebate we're going to talk about, right. HST does not provide any harmonization. It just provides 13% tax, which the government is taking from us.
So what's the current percentage on, I know if I go to the store now and I buy a dress shirt or a pair of shoes, I'm paying 13% of the harmonized sales tax, for short HST. What is it for on real estate purchases?
Anything brand new.
Okay.
Okay, so any new property from a builder, whether it's a condo or a home, you have to pay 13% HST. Even if you build a home and sell the home yourself, there's HST on that.
So if I were to, I just want to get into that a little bit further, Jeff. Help me understand that, and more importantly, our listeners understand that. So if I buy a pre-construction condo, or if I buy a home like in a subdivision, like just a regular 4-bedroom detached home, I'm paying the HST.
Anything that's newly built.
Got it. And if I'm building my own home, I still have to pay the HST.
If you're building your own home and selling that home.
Got it.
Okay. If you're keeping the home, there's no HST.
So now, so let's talk about that. So what type of buyers have to pay for it? So and I guess what I'm asking for, is it even if I'm going to live in the home, or is it just from an investor's perspective?
Okay, so I guess your question is with respect to the Ontario rental rebate.
Yes.
Okay, so the Ontario, there's a rebate. Okay, so on a new purchase, let's say the purchase is $500,000. Into that $500,000 in the agreement of purchase and sale, 13% is built in. Okay. On top of that, you have to pay an additional $24,000. Okay. Now, whether you are an end user or whether you are an investor, or the third category we'll call a buyer of an assignment, okay, everybody has to pay HST, and everybody has to pay for this rebate. Now, it's a rebate. It's an interesting term, just like you want to call it harmonized, because the rebate is what you pay. You have to pay this $24,000 on closing, and then you have to file to get it back. Now, in a scenario where you are an end user, okay, let's say you buy a property from Tridel. Okay. Tridel will actually lend the user $24,000 and submit that to Revenue Canada. Very next month in their IST, that Tridel, the builder, will get the money offset.
How long does that take?
Well, if it's with directly from the builder, probably a month. But you don't have to deal with it, because if you're an end user, most builders in Canada just give it to you, and you never have to worry about it.
Okay, and just to go into it really quickly, end user, if I'm going to plan to live in this unit or home. Okay, I just want to clarify.
If you're planning to live in it, or if your blood relative is living in it. Okay.
Okay.
So a close family member.
Okay, so it could be my wife.
Your wife, your sibling, or your parent.
Perfect. And obviously if one of my kids want
And child, yes.
So,
child too.
so I don't have to live in it personally, even if I put it under my name. So I go buy it. I put it all under my name. I go get the financing. My blood relative is going to move into it. I don't have to pay for this HST.
Correct. It's considered an owner-occupied residence.
Got it. Okay, now let's get into the meat of if I'm an investor.
Okay.
And just clarify for me as well is that as an investor, if I rent it out or don't rent it out.
Okay. So if you are living in the unit and you are not renting out, there's no lease agreement.
Okay.
Okay. They're going to consider it a final use.
Okay.
Okay. Like a self-use inventory. Okay. Now, if you are an investor, it's in the builder does not want to lend you this $24,000. Okay, because if the builder, the investor could get denied this claim.
Right.
Okay, it takes months in several cases.
And why would they get denied from this claim?
Well,
what's some of the things that come up?
CRA wants your money.
Right.
And in our when we've looked at it, if they don't file for it for one.
Right. Yes.
Or if they file incorrectly.
Okay.
If they state something incorrectly.
Okay.
Okay. CRA is happy to take your money.
Okay.
I'll give you an example.
Yes.
In 2013, so the HST law was passed in 2010, July of 2010.
Okay.
We didn't start seeing HST or this rental rebate being applied until April of 2013.
Right.
Because that's when those properties started closing.
Got it.
Okay, they bought in 2010, started closing in 2013. RealNet estimated there were 30,000 units closed in the municipality of Toronto in 2013. Only in the municipality of Toronto, 30,000 units closed.
We're not even considering the rest of the Greater Toronto Area,
Correct.
Mississauga, Brampton, Richmond Hill. So
Correct.
just Toronto,
Just Toronto.
30,000.
Okay. Out of those 30,000, to qualify, you just need to rent out this property for a year. Now, you're a realtor.
Yes.
You know that most of these units would be rented out if you're an investor. For 99% of them.
Yep.
That's the whole idea of being an investor, right? Well, out of 30,000 units that have been closed, I'm going to let you guess. Out of 30,000 units that are closed, how many do you think applied for the Ontario rental rebate, which is $24,000 you're going to get back?
Right.
Doesn't matter if you're a Canadian resident or an Ontario resident, whether you have a SIN number or not. If you have a 1-year lease agreement, you should be getting this back. So out of 30,000, how many do you think applied in 2013? I'm
going to venture to guess 10,000.
2,100.
Woohoo! Wow.
Less than 10%.
Let me just recap that. And this is why I really wanted to have you on. It's such a pressing conversation. I should say a pressing question we get on a daily basis. Is that so? Out of 30,000 people in 2013, we only had 2,100. So there was 27,000 and change, 27,900 people that did not get the $24,000.
$670 million in Revenue Canada's pockets. Okay? And now we can get this money back 24 months after closing.
Okay, so I want to get into that.
Okay.
But just before we get into that, I did want to ask you, so as the investor, they want to get this rebate back. How do they just get the rebate themselves? And what's the process of getting it back on closing when they meet with the lawyer?
Okay, so after you pay this, you have to pay this on closing.
On closing.
So it will be in your lawyer's statement of adjustments.
Yes.
So there's two statement of adjustments. Your personal lawyer's statement of adjustments and the statement of adjustments from the builder. The builder's going to tell you what other fixed costs there are. There's going to be levies, development charges, and several other things. Okay, so you're going to have that along with the HST. So this $24,000, if you're an investor or a purchaser of an assignment, will get this added on to your statement of adjustments.
Okay.
So this means that check that you have to give to your lawyer on closing gets a little fatter.
Yeah, obviously.
Yeah. Okay. So once we do that, we can file the day we close. Okay. We need the statement of adjustments. We need your agreement of purchase and sale. We need the assignment agreement if there was an assignment agreement. We ask for
Now you say we, and so I know that you have the service to do that, and I'm definitely going to want to ask you about that and dig deep into that. Now, if there's just a regular investor, one of our listeners listening, and they just wanted to do it themselves, is this something that they can actually do themselves? Can they have their lawyer do it? How does that all work? I know there's issues that come up, and we're going to dive into that. But if somebody just wants to do it themselves, is there a form that they can fill out?
Sure. Yes, there is. So Revenue Canada has made it a process that people can do.
Okay.
Now, I don't know. Do you file your own taxes? Let me ask you.
Well, I don't.
Right.
And just to your point really quickly, I also see that we know that only 2,100 people did.
Exactly.
But now if there is somebody who does, they can still fill out a form, they can get all that
They can fill out a form, and they can engage with Revenue Canada.
Fantastic.
Now, people are welcome to do this. I think it's a 67-page manual that you have to go through, and it gets kind of complicated.
For sure.
Also, if you state the wrong thing to Revenue Canada, they will keep your money.
Mm-hmm.
Okay, we had a gentleman who did not rent the property out. He engaged Revenue Canada over the phone and said, I paid this, but you know what, I should get it back because it's my summer home.
Right.
Okay, this is a property in Muskoka. They denied him the rebate. He had to pay it because he's not living there. It's not his primary residence.
Sure.
And he's not rented it out. He falls into that gray area.
Right.
And they flagged him, and they kept his money.
Okay.
So you got to be very careful in every communication that you have with Revenue Canada because they want your money and they will take it.
Well, it's, I always use the analogy, right, Jeff, is that we all drive cars, but we don't need to know how to fix them. And what I mean by that is that we don't need to be a mechanic. And so get people on your team. And guys, there's, if you go back to a couple of episodes ago, we spoke about your real estate all-star team and your lawyer. And, we didn't talk specifically about, Jeffrey and his team or any other services, but there's so many other services like painters and contractors that you want to make sure that you always get it on your team because they do this on a regular basis. We started off today's discussion and I mentioned that Jeffrey and his team have helped investors reclaim over $8 million. They got it figured out. So Jeff, when do you see most people coming to you for your service?
Well, let me just back up one second.
Yes.
For the cost of $495, you're risking $24,000.
So let's talk about this. So the cost of $495 is for what? Your service?
It's just for the filing.
Got it.
So once you've paid the money,
yes.
To Revenue Canada, you want to get it back as quickly as possible.
Okay.
So you can try it yourself, and you possibly could get it back yourself, or you can pay $495, and we're going to do it for you.
On an average, and nobody's holding you to this, even though it's recorded. I'm not saying we're holding you
just between you and me.
Just between you and I here. Give me a time frame. Like I'm going to close on something, right now we're in 2018, almost going into April. We have obviously investors closing on buildings in the next couple of months. So how long would you say approximately?
4 to 6 weeks.
Okay, so the investor pays it. Sorry, they pay the HST and they come to you and say, you know what, I just don't have the time. You handle it. I want to make sure it's done correctly. The cost would be $495. You handle the filing, and they could expect to see that rebate come back to them of about within about 4 to 6 weeks.
That's correct.
Okay.
But we also have a secondary program as well that you might find even more interesting.
Sure.
Because when people find out about the rebate or the amount that's due on closing, the extra $24,000 they have not calculated for.
Right.
What do? Right? You call the bank of mom and dad. Right? Your bank probably won't lend to you based on the lending criteria right now. I am also a mortgage broker.
Yeah.
You're probably stretched pretty thin, specifically if it's a secondary property.
For sure.
No one's going to give you $24,000. Also, the banks have a mandate not to lend for the purposes of taxes.
And when you mention the statement of adjustments that the lawyers send, I mean, they're going to get that essentially the week of closing.
Exactly.
Or 3 days.
3 to 5 days.
3 to 5 days before closing. I mean, sometimes, in the past we've seen 2 days before closing. And knowing that, when you get that invoice that also includes the extra $24,000, it's going to be tough getting it. So I'm totally on board. So talk to me about the other services that you guys provide.
So the other service is we do the rebate and a loan. We will lend you. We're so positive that we will get the money back from Revenue Canada. We will lend you the money, and we will file the loan. We get the money back. You get the money back from Revenue Canada, and we pay off the loan.
Okay, that's fantastic, but we need to clarify a little bit more. So, Joe Blow's closing on a property at 123 Main Street, at the corner of Walk and Don't Walk, and what would so they're going to be paying $24,000 of HST. You guys will loan them.
We will
the
loan them
$24,000, and you'll deal with the HST rebate. No, the $24,000 never leaves Joe Blow's account because he's not paying for it. You and your team pay for it, and your company pays for it. Then what does the investor pay to you? Is it still the $495 or
No.
not? Great. So what's the cost of getting the loan and doing all the filing? What is the cost there?
So just the filing is $495.
Okay.
The loan and the filing is $1,495.
Okay, $1,495.
And that's the whole package.
I should ask because this discussion is called HST relief. Is it $495 plus HST?
Yes.
Okay, awesome. I just want to know.
Everybody
It's always HST. I just wanted to make sure. Okay, so that's fantastic. What are some common ways in which you've seen purchasers forfeit their rebate?
Okay, well, I was touching on one earlier.
Okay.
Whereas if it's a summer home,
Yeah.
okay, it's not occupied.
Yeah.
Okay, you would forfeit it.
Okay.
Okay. If you lie to CRA,
Mhm.
now in CRA's own words, 70% of buyers are lying.
And we strongly advise against lying to the CRA. I mean, we should have that as a
100%.
disclaimer.
We never advise lying to the CRA. We've created a scenario here where no one needs to lie. If you don't have the $24,000, we will lend it to you, and then we'll file to get it back. Okay? We don't suggest lying to the CRA. If you're lying to the CRA, basically most people that are filing and saying they're living there will get audited for this.
And sometimes, in all honesty, it's not a matter of lying, as we're obviously just joking around somewhat here, but it's just people make mistakes on forms and they just don't know enough, or they try to do it on their own. We always tell the story of Googling. It's a great place to start, but it doesn't have all the answers. And so it's not always a matter of just straight up lying. It's just sometimes we make some mistakes on paperwork, and you just need someone to overlook it.
Or even life changes, right?
Great point.
If you plan to live there and you live there, I'll give you a perfect example.
Yes.
We had a mother, a divorced mother, single mother, who bought a property several years before the closing. She moved into the property, and now she's living there with 2 kids. Okay, it's a 1-bedroom apartment. Obviously, it's very difficult for 3 people to live in a 1-bedroom apartment.
Yes.
She ended up selling the property because it did not fit her needs after living there for 2 months.
Okay.
The kids were born in Canada and are Canadian citizens.
Okay.
Because Revenue Canada thinks 70% of the people are lying, she goes and says, we sold the property, and they say, we think you're a flipper. Now, that is a 4-letter word. Okay?
Right. Yeah.
Flip is a 4-letter word. You don't want to be called a flipper.
Right.
Okay, someone who flips basically means who sells the property before 18 months.
Perfect. Yeah.
Okay?
Yeah.
So they said, no, you're a flipper. Well, she goes, well, believe me that I bought this property and I had 2 kids and I can't live in the property. They said, we don't care, and we want our $24,000 back.
Okay.
And now she's in a 3-year legal battle to get the money back because that's the way they operate.
Okay, listen, we see it all the time. You did mention something a little earlier. I just want to make sure it came through properly. If we have investors that have purchased, back in 2014 and 15, can they go back at that far, or is there a time frame?
There's exactly 24 months from title transfer. From your final closing, when you actually close and get the mortgage and the property comes into your name, you have 24 months to get that back. So all those people in 2013 had up until 2015 to get that money back.
Okay, so essentially if you purchase somewhere in 2016, early 2016, you still have time.
If you closed.
If you closed, I apologize. Not if you purchase, if you close, which is actually even works out even better. Much better. So if yourself, you've closed within the last 2 years, as Jeff mentioned, and you have not got this rebate, get in touch with us, as well as if you know of anyone that closed and they need this rebate, or they should get this rebate.
Everybody gets it back, whether you're a Canadian citizen or not, whether you're an Ontario resident or not, whether you have a SIN number or not. As long as you can prove that you've rented this property out and have a 1-year lease agreement, we should be able to get this money back for you.
Well, and at least call in, guys. Give us a call. I mean, on that note, Jeff, thank you so much for your time. You really cleared all this up for us. Thank you again for your time.
My pleasure.
Guys, at any time, if you have any more questions about HST relief, or anything else or suggestions that we should be discussing on this podcast, please get a hold of us. The easiest ways is you can email us at info@reccanada.com. Call us at 416-979-0333. You can leave a comment on any one of our social pages, send smoke signals, whatever you got to do, get in touch with us. As always, we hope we brought you some value today, and thank you so much for listening to the Real Estate Center audio experience.